Right, let's take a detailed look now at what's going on. First, longer term. We have not yet updated the dailies and the weekly charts, but on this chart here, it's very important for us to realize, understand that look, the current market, when we go to the shorter time frames that have been segregated, is going to be attacking level $1. Okay, so that level $1 here means that we're trying to break out of this ascending or this asymmetric triangle on the daily chart. We check the momentum picture on the daily. Now there's going to be rejection, of course. There's going to be a lot of choppiness because you have very strong internal necklines here. If the momentum plot on the 4-hour chart is positive, and it is, we did check this, then we cannot expect that we're going to be doing these level Bs. That's why this is not yet updated. There is really going to be just one head into level C, and as of that point we're going to be moving higher into 1.2 and 1.21, that secondary neckline, and trying to any retractions, that level B will rise and there will be a support at that higher degree neckline at $1 and 1.06 to be exact. We're going to have an AB at that formation before the market moves higher. So whatever we're going to be trading, we're going to be taking profits at $1.06 and then rebuying and taking profits at $1.20. Now let's take a look at actual money management and the internals. Okay, so we're looking here at, this is today's 4-hour chart. We have very strong momentum, so we have a trigger. We have a trigger that the market has based. This is the same head that we're looking at here now on that. Sorry to flip so quickly on. This is the same C here. This is the same head that we're looking at on this daily chart. Very important formation. Very strong basing formation if it is on 4-hour trigger momentum. We call this 4-hour trigger. We call this trigger momentum. This is today's 4-hour chart. This is trigger momentum because we have an internal 1 and internal 2. There's a bounce and there's continuation. So long as the momentum picture above the 4-hour continues, especially the 1-hour continues to trend, any corrections on this kind of strong momentum on the 4 hours are going to be contained at the higher neckline, at the higher degree neckline. Okay, so it is possible that there's still a correction. You'll find that we're having white labels of A and B, but most likely this is valid breakout. There is here a higher degree 1 and higher degree 2. There's a neckline here. That wave 1 and that wave 2 is at the neckline. Every corrections now are contained by 0.92. We were expecting the market to move actually higher to the next neckline into wave 3 before doing any kind of correction, and that correction will just take you to 0.97. But ultimately it is possible to have a correction to 0.92. It's a buy, all right, and you just have a stop below level 2. It's going to be 0.80 and 0.78, these levels here. Essentially you could actually have it at 0.80 because your stop is really just below internal level 2, doesn't have to be below the higher degree level 2. We would record this, we would of course take profits at $1, $1.03. We're looking at $1.06 immediate target into wave 3. There's going to be a correction back to that neckline that we're showing here and that shoulder, there's a shoulder level here. We do a rebuy at 0.97. It's going to be wave 4 and $1. Next target, remember what was being said, is 1.21. This below level 1 here is 1.16, and we're going to be attacking 116 and 120. Remember this 120 level, we have to relate it to what we're seeing on the daily chart. 120 is right in the midst, 50% into this cycle consolidation zone. This is 120, 115 is also right in the midst of that cycle consolidation zone. Of course, when we go to 4 hours, we are looking in essence that we're testing our first line coming below level 1 or that level 1, but most probably below that level 1. If it is registering, it is not, so we're looking at 120. It is below the higher degree level 1. Would be our first neckline. All right, let's take a look now at actual internals. So remember what was said. Of course, the 1 hour, this is 30-minute chart, is consistent positive momentum. Well, also this is 30 minutes. Let's check it on the 1 hour. It is, I believe, good, consistent, positive momentum. The 4 hours is trending momentum. Excellent, as a matter of fact. And the day, we haven't really looked at this, it's going to be doing a zero line rejection, or it's going to be doing a level 1. Okay, so if the daily chart is going to be doing a level 1, we expect then this neckline here that we're having at $1, we think is going to be replicated at 120, 1.2. By that time, you're going to have the one on the daily chart, meaning that if there's not going to be a zero line rejection because all cryptocurrencies are now bullish, then this too should be bullish. Okay, so you're looking at, by the time the chart goes above 0, or is going to reject that overbought, you will be at this neckline 1.2 on these levels. We're looking, of course, at a retest of the internal level 1s here, so it could be a bit lower, but most probably we're going for ultimately 1.2. So of course we don't want to get carried away. We want to make the maximum use of the volatility that we are seeing, and therefore we trade it just for one line. There was a question earlier if Ripple is a buy. Yes, Ripple is a buy actually right now, for that matter, and we would consider that this is hopefully, there is some kind of an ending diagonal, but this ending diagonal is going to trace all the way to this neckline. So we're buying at the top of a level 1. Again, I don't want to tell anyone what to do, but we would use this as information and not speculation. Means that if you buy current market 94.48, you just have a stop at 83 and 80, and you can even have a stop right here at 85. Best stop is going to be 83, seriously, or just 83. Yeah, 83. Okay, so it's just about 11 cents or 12 cents, and our target of course is gonna be $1.06. So now we would want to do correct econometrics, meaning that we do not get into a position unless it's really not just making profit, but making desirable profit, what we would consider as usable profit for us, and what we would want to make meaningful profit. Okay, so we're looking at, of course, 106 is 161.8, that level here, and then you just close. Now you have to do the metrics yourself, or the econometrics of the position yourself. All right, you have to do the econometrics of the position yourself, and it would mean, I really am not sure about size, but what's going to relate to maybe 5% risk. That 5% risk, if it is acceptable, would have to be actually divided by the number of contracts that we're going to be buying, on the premise that we are going to have a stop at 0.82, and we're buying now 0.95, so this is something like 13 cents. So you would have to relate that in terms of how many contracts you're going to buy. The target is 1.06 and 1.058. You'd also have to relate the kind of yield you're going to be getting. You expect to get this target probably within the coming 2 weeks, this week and the next, I would think. We are going, of course, to test that neckline and a bit above. If this is not a meaningful profit, or if this is not good profits, all right, or if it's not worth the risk, that is, of course, you would stand out of the trade, the contract size, and the important thing in the final analysis is how profitable you are. Not on the premise that we just want to be profitable for the sake of a contest, but for the sake of just not wasting resources and doing your job and our job right. Okay, so Ripple is a buy right now. Current market is a buy. We're looking at a stop at 0.82. We are looking at target at 1.06. We have very strong momentum confirmations on the 4 hours, 1 hour, and the market should go up quite easily and quickly to 1.06. 1.06 is actually that level between the next two higher degree necklines. You're having a neckline here. The higher degree neckline comes in at 1.12, so it's rightly at 50%, 1.0614.